You don't have to be in the market the whole time, because not putting that trade on can actually save you money.
歡迎又嚟到我要做訪問啦！今日咧繼續咧係請咗 CMC 嘅 Market Strategist 啦 Michael Hewson 同大家講呢個 Part 2。今日咧就會多啲分析嘅環球市場啊，特別最後會講到金油啦，咁大家記住留意埋啦。Hi everyone, welcome to Part 2 of the interview. With us we have CMC Market Chief Strategist Michael Hewson. So today we are going to focus more on Michael's take on the economy, such as US and China tension and precious metals. Michael, thanks for joining us again.
Thank you.
If you haven't watched part 1 of the interview, be sure to watch it, and the link should be in the description below.
Okay, thanks, Michael. So let me quickly start out with the question that's actually on my mind. What is there to buy for the rest of this year? I'm sure all our subscribers want to know. Me, myself, I'm more of an equity investor in the US market. And there's a crazy V-shape in the market this year. As we speak today, right now, S&P just broke the previous high of 3,400 points. As well as what is your insight towards the upcoming election, and how is it going to affect the US market in the next few months?
Yeah, I think really that's the big question. I think when you've got an awful lot of political uncertainty, which I think is nothing new, we've been having to experience that for the last 10 years, pretty much since the financial crisis. And if you look at how equity markets have performed, it's been one long bull market. And ultimately, I think those of you who've watched the previous interview will know I'm very much a trend follower. So at the moment, US stocks are very much in buy the dip mode. And when you look at what central bank policy, it's geared towards supporting the economy. You've got the Federal Reserve looking to be all in for the foreseeable future. You've got the European Central Bank also likely to be all in for the foreseeable future. And you've also got the Bank of Japan looking to be all in for the foreseeable future. Now, you look at the Bank of Japan's balance sheet, it's 132% of GDP, which is a staggering amount. But then you look at, say, for example, the European Central Bank, its balance sheet is only 61% of Eurozone GDP. The Federal Reserve is only in the mid-30s of US GDP. So these central banks, the ECB and the Federal Reserve, can do an awful lot more. And that suggests to me that there's potential for more upside for US stocks. Now, that's not to say that it's a one-way ticket to the moon. There is no such thing. And what I would say is the US election will have a part to play in how this pans out. Say, for example, the Democrats, particularly Joe Biden, they look as if they might win. There will be significant concerns about higher taxation to fund this Green New Deal. Joe Biden is very much beholden to people like Elizabeth Warren, Bernie Sanders, who are very much high tax, high regulation. So that potentially could be very bad for US tech stocks, companies like Apple, who have been heavily criticized for not paying enough tax, companies like Facebook, companies like Amazon. They've received an awful lot of criticism from Democrats from across the political divide for not paying enough tax. So a Biden win could have significant impact on the US tech sector, which has pretty much driven an awful lot of the rally that we've seen in the S&P 500 and NASDAQ over the course of the past few months. If Trump wins, it's going to be pretty much status quo. So I think the unknown here, gentlemen, is really what would the Democrats do in the event they win the presidency. So I think what you could find is that there will be an awful lot of volatility as the polls shift one way or the other. In terms of the China trade relationship, I don't think it's in either side's interests to really rock the boat too much. So what you could get is an awful lot of political rhetoric from President Trump bashing the Chinese administration simply because it plays well with his base. Really, for me, it's what goes on behind the scenes. And ultimately, if China does more trade with the US, that's a good thing. because what it does is it keeps the mechanics of trade ticking over, and it keeps the global economy ticking over. My biggest concern, I think, is really the second wave of coronavirus and what that will do to the economic fortunes of pretty much the whole global economy. So in China, in Japan, in South Korea, what it will do in Europe, what it will do in the US. But ultimately, I don't think it really matters that much, because what we've seen, I think, at the moment is a significant disconnect between what the economy is doing and what the stock market's doing.
Yeah, that's actually brings us to the next question. That's actually one question I hear every single day when I do this type of YouTube, Facebook, and like on our channel. Everyone is asking us, the US stock market we just hit new highs. NASDAQ hit, we're getting close to 12,000 points already. But we just witnessed the worst quarter in terms of economically speaking in the US history, right? Minus 30 something percent growth. So now there's a huge loss of correlation in terms of the economy and the stock market. What is your view on this, as well as, because I always get asked this question, now I can finally ask somebody on this.
Yeah.
And as well, do you think in the next couple of months, will we see a big dip like we did in March or around April, like a quick, like that painful minus 10% type of dip again?
Yeah, I think that's a quite high probability that will happen. October generally tends to be the time of year that you get an awful lot of seasonal volatility. It's the lead up to the US presidential election. You could get a dodgy opinion poll that could spook investors, get them to cash out of their holdings. You've obviously got the Robin Hood effect, which is helping to drive asset values higher, an awful lot of small investors. My concern is that in itself is helping fuel this bubble. But ultimately, I'll tell you what I said in the first part of this interview. What's the price action doing? We've talked about data. Economic data is uniformly bad. And yet, despite all of that, stock market valuations are continuing to go higher. Why are they doing that? Well, it's simply speaking, what's causing it is the fact that there's no other place to put your money. And ultimately, what you then do is you put your money in the momentum trade until such times as it snaps. And once it snaps, you get out. And I think that's probably the best advice I can give anybody. Trade the underlying trend until such times as it ends. Then get out, sit on your hands, wait for it to settle down before you get back in again. You don't have to be in the market the whole time. People say, well, I've got to have a position. No, you don't. If it doesn't suit you to have a position, sit on your hands, go and walk the dog, do something else, because not putting that trade on can actually save you money if it goes against you. You don't have to be in the market all of the time. It's the key cornerstone of my technical analysis strategy is capital preservation first, capital accumulation second. Always think of that when you're tempted to trade and you're not altogether sure about the overriding level.
So the US and China tension has been worsening by the month, right? So I know we just talked about the trade war, but this time we are witnessing this TikTok event and with the Tencent and WeChat, right? So it's seemingly like they're touching to another level in the trade war, right? Do you think this will eventually lead to a huge downturn in the market? It's not about money, it's about IP and stuff like that. Will it be a big downturn in the market in the future?
I think there's an element of intellectual property about it, but I would be very surprised if either side pushed it to the extent that there's a big downturn in the market before the presidential election. Trump wants the stock market as high as possible to get re-elected. He wants the US economy to start recovering in the lead up to the US election. Some of the economic data that we've been seeing coming out of the US has been a little bit troubling. They've been trying to get a stimulus plan through the Congress. I think that could well happen sometime in September, but ultimately China doesn't want to fall out with the US because it wants to encourage inward investment into its own markets. The recent reforms with respect to Key Next, I think, are a key component of that. So there'll be an awful lot of noise, but I don't think there'll be an awful lot of substance. That's my gut feeling.
So another question is the precious metals rally in the first half of 2020, especially gold and silver. So we all go crazy about it, right? Probably because of the US yield, because of the QE, because of potential negative interest rate, who knows? Do you think this trend will continue in the near future?
Yeah, I do. I think gold in the long term is very much in the same vein as stock markets. It's very much buy the dip, simply because I think US real yields will remain suppressed. And ultimately, the argument for owning gold is that it has no value, it has no carry. Well, if you put your money on deposit, you have a negative yield anyway. So why not own gold rather than anything else? Okay, you may have your holding costs, but ultimately that's only if you own physical gold. There's ETFs that you can buy which have no holding costs and which give you exposure. And I think any investment portfolio has to have some form of gold exposure in it, just in case the wheels do come completely off.
Great, sounds good. Okay, one last question I'm sure all of followers would like to ask is, what would you say as of right now, we're looking at August 2020 right now, for the rest of the year, what would you say is, would you advise is a good portfolio weighting right now in terms of how much percentage do you think we should put in equities versus commodities versus ETFs, etc.?
That's a very, very difficult question to answer. I would certainly suggest that you'd have 10% in gold just to offset any significant downside risk. But certainly I would suggest that you're probably slightly overweight stocks relative to bonds, simply on the basis of the fact that bonds aren't really yielding that much and actually, for the most part, yielding negative yields. So I would suggest maybe 40% stocks and ETFs perhaps. You know, it's very, very difficult to come up with a optimum portfolio, but I would certainly keep 20 or 30% in cash, just in case you get a dip and then you can drip feed money back in. I certainly wouldn't be completely in the market at this point in time. So maybe 35 equities, 25 bonds, 10% gold, and the rest in cash.
Interesting, because I have about 20% in cash as well. So that's actually
I think that's about right, because with the valuations as they are at the moment, I think there's certainly potential to see a significant dip, as you indicated, in the lead up to the US presidential election, because October generally tends to be a turbulent month for stock markets, and I certainly wouldn't rule out a dip. And if you actually look at the way US equity markets are relative to their long-term moving averages, they're quite a distance away, and that gap needs to narrow on a long-term basis, simply because prices generally tend to revert back to their long-term averages after a while of being a long term away from them. The timing of that, however, can be a little bit problematic.
Makes sense. Right now it's just all up. No, not everything's going up, especially the tech stocks and stuff like that.
Great. I wouldn't be getting in at these sorts of levels. Certainly not in terms of tech stocks.
Okay, great. So thank you very much, Michael, for your time. We really appreciate you spending your time with us today. We learned a great deal in these two interviews. If subscribers, if you'd like to learn more from professionals such as Michael, please make sure to subscribe, like, share our video, and any comments, please leave below. And then once again, thank you, Michael, for your time. We'll look forward to hear from you again. Thank you.
Thank you very much. Thank you, guys.
咁希望呢兩次 interview 咧對大家有一個非常充實嘅參考，大家希望都學到嘢啦。咁記住咧 like 同埋 subscribe 咧，咁我哋第日有任何更加多嘅 interview 咧，會同大家再去分享嘅。投資唔係大專利，下次見大家，拜拜。
真係多謝大家支持我嘅10年財務自由師傅一生投資藍圖嘅電子天書。早前嘅 pre-order 咧3日已經超額售罄啦。我哋 upgrade 咗 server 之後咧，正式凱旋回歸。而家係 pre-order 嘅時段，有興趣知道點樣先可以做到財務自由？我會用我親身嘅經歷話俾大家知，真係唔係遙不可及嘅事嚟㗎。即刻去下面連結收睇免費嘅1小時簡介加工作坊，仲快啲去！量化交易手冊新書發佈會加工作坊，10月5號會準時見大家。呢本亦都可能我最後寫一本書。 但係新書預售已經賣完㗎啦。想支持我嘅新書都可以參加頭先講嘅免費工作坊，都有少量嘅書係當晚會賣嘅，快啲到下面連結報名啦！為慶祝我要做富翁 YouTube 訂閱人數超過30萬，回饋翻大家，呢個遊戲呢就係我要幫你俾首期，送你高達52萬嘅首期，幫你上車噶噃。簡單步驟就係1，訂閱我要做富翁嘅 YouTube 頻道；2，去到下面遊戲連結登記做玩家；3，就係不停叫 friend 玩呢個遊戲，然後叫佢哋登記嘅時候呢，填你嘅電郵做介紹人。我哋有22塊地同埋一個終極大獎，詳情可以睇翻說明點樣玩啦。我哋嘅遊戲係歡迎任何地區人士參加嘅，下一個上車嘅可能就係你啊！仲唔快啲去報名參加？今個禮拜仲有好多其他嘅免費線上分享會，全球朋友都係參加㗎。我哋有期指、期權、英國房地產、程式交易、美股班同埋我新書發布，大家記住參加啦！仲未訂閱富翁電視 MTTV？快啲去訂閱啦！